Good morning, it's Friday, January 5th, about 6 a.m. Central Time. Over at the precious metals are weaker after yesterday's flat session. You have February gold down $4 at $20.45. March silver unchanged at $23.19. March copper down 2 at $3.82, and April platinum down 5 at $9.60. So the market's really getting a bit of a reality check here. Even if you look at the equity markets, which have been quite resilient, we saw U.S. equity futures up for about 9 straight weeks. Now they're in jeopardy of closing out that first loss here. The NASDAQ had closed lower for 5 straight sessions here, and it's the longest losing streak since October of 2022. So looking at crude oil real quick here, a lot of questions on that. Natural gas, crude oil prices were up about $3-4 higher yesterday, and then they had a big setback, and it was really the inventory data on the product side that weighed in on the markets. We saw gasoline inventories jump about 10 million barrels to 237 million barrels total. Natural gas, despite the rally, and despite the drawdown in natural gas inventories, about 14 billion cubic feet, we saw total storage up about 13% on the 5-year average. So a lot of times you want to use those 5-year averages to figure out whether we're in a tighter inventory situation or in a surplus. So 13% above the 5-year average. Now getting into things you guys like: gold, silver, copper, platinum. So we got some weakness going on right now. We got some strength going on in the dollar. The issue is these interest rate cut expectations are now starting to come down. I think that the hangover from that December FOMC meeting is really starting to kind of fade into the sunset. And some of the data coming out, especially across the pond, and here with our jobs data, has really affirmed that. So Eurozone inflation data rebounded in December. It hit 2.9%. They were only expecting 2.4%. So that jump up takes the ECB's interest rate cuts down to about a 40% chance that they're going to cut rates here. It was a 70% chance yesterday. So that's really fading. The U.S. probability of an interest rate cut is also fading. What's that do? Puts pressure on the dollar, puts pressure on U.S. equities, puts pressure on gold, and also silver. Silver did dip briefly below $23. I think that that's a key level of kind of pocket support when you get down to this 23 down to about 20. I know it's a wide range depending on the contract size you trade, and then also the size of your trading account. That will make a big impact on it on a percentage wise, because these are leveraged products. Now looking at some other things here, again, the dollar index 102.43. There was a massive bet on 10-year treasury yields that looks like it was 0 DTEs coming out here that should expire today. That bet that the 10-year treasury yield will hit 4.15%. It's at 4.4% right now. So that would be a massive sell-off in treasuries. You would probably see U.S. equities dive on that, and you'd also see gold futures dive significantly as well, perhaps down to some of these key levels of support, 2028, 2013. You got to get back above 2075, 2100 in order to reestablish those upward trends. Now the data that you got to watch today, this is 7:30 Central. They're expecting, this is the non-farm payroll report. The consensus is 170,000. The last report was 199,000. I looked at some of these, all these analysts and all these banks out there. They're higher than what the consensus is. You got to take like places like Bank of America, 175, Goldman Sachs, 190. And then also, you look at private, they think had grown. They also think that the unemployment rate had ticked down at 3.7%. These are all things that are going to really firm those treasury yields. So kind of brace yourself here for some volatility coming into that 7:30 time zone. If you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck and good trading.